The relative strength index RSI is a monumental indicator used in a technical analysis. RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions in the price of that security. So, hello my friends, my name is Spotty. People who are interested in trading are gradually gathering here, and I'm delighted to see new subscribers to the channel. I created this YouTube channel to share everything I learned throughout years of practice. I conduct sessions, demonstrate strategies, and talk about indicators and patterns. Sometimes I learn something new together with you because in trading you're always in the process of development. So, subscribe to my YouTube channel and join my community. I'm always happy to see you and read your comments. The RSI is displayed as an oscillator line graph on a scale of 0 to 100. The indicator was developed by J. Wallace Wilder and introduced it on his similar book and new concept in technical trading systems. The RSI can do more than point to overbought and oversold securities. It can also indicate securities that may be primed for trend reversal or corrective pullback on price. It can signal when to buy and sell. Traditionally, an RSI reading of 70 or above indicates an overbought variation. A reading of 30 or below indicates an oversold condition. As a monumental indicator, the relative strength index comprises a security strength on days when the prices go up to its strength on days when the prices go down. Relating the result of these compressions, the price action can give traders an idea of how a security may perform. The RSI used in conjunction with other technical indicators can help traders make better informed trading decisions. And the RSI uses a two-part calculation that starts with the following formula. The average gain or loss used in these calculations is the average percentage gain or loss during look-back periods. The formula uses a positive value for the average loss. Periods with the price losses are considered as zero in the calculations of average gain. Periods with the price increases are calculated as zero in the calculations of average loss. The standard number of periods used to calculate the initial RSI value is 14. For example, imagine that market closed at higher 7 of the past 14 days with an initial average gain of 1%. The remaining 7 days all closed lower with an initial average loss of 0.8%. So, after the RSI is calculated, the RSI indicator can be plotted by an essence price chart as shown on this image. The RSI will rise as the number and size on up days increase. It will fall as the number and size or down days increase. The RSI indicators can stay in the overbought region for an extended period while the stock is in uptrend. The indicator may also remain in oversold territory for a long time when the stock is in a downtrend. This can be confusing for new analysts, but learning to use the indicator within the context of the previous trends will clarify these issues. Why is RSI important? So, traders can use RSI to predict the price behavior of security. It can help traders validate trends and trend reversals. So, it can point to overbought and oversold securities. It can provide short-term traders with the buy and sell signals. It's a technical indicator that can be used with others to support trading strategies. The primary trend of the security is important to know properly to understand RSI readings. For example, well-known market technical Constance Brown proposes that an oversold reading by the RSI in an uptrend is probably much higher than 30. Likewise, an overbought reading during a downtrend is much lower than 17. Many investors create a horizontal trend line between the levels of 30 and 70 when a strong trend is in place to better identify the overall trend and extremes. On the other hand, modifying overbought or oversold RSI levels when the prices of a stock on ascent is a long-term horizontal channel or trading range rather than a strong upward and downward trend is usually unnecessary. The relative strength indicator is not as reliable in trading markets as in trading ranges. In fact, most traders understand that cycles given by RSI a strong upward or downward trend often that can be false. Generally, when the RSI indicator crosses 30 on the RSI chart, it is a bullish signal, and when it crosses 70, it is a bearish signal. But either way, one can interpret that RSI values of 70 or above indicate that a security is becoming overbought and overvalued, so it may be primed for trend reversal or corrective price pullback. An RSI reading of 30 or below indicates an oversold or undervalued condition, so overbought refers to a security that trades on a price level above its value. That means that it's priced above where it should be according to specifications of either technical analysis or fundamental analysis, of course. Traders who see indicators that a security is overbought may expect a price corrective or trend reversal. Therefore, they may sell the security. The same idea applies to the security that technical indicators such as the relative strength index highlight as oversold. It can be seen as trading at a lower price than it should. Traders watching for just such an indication might expect a prime correction or trend reversal and buy the security. So let's observe its functionality in the markets. For example, let's consider the British pound against the Japanese yen currency pair. We can immediately initiate a trade with a $300 increase in GBP and Japanese yen. A $300 trade was opened within 3 minutes. Now let's comprehend the reason behind the initiative. Firstly, we examined the moving average, which was breached by a green candle. Prior to that, there were 3 consistent green candles, and the subsequent one also began with a green candle. The second signal is the evaluation of the MACD. In our MACD, the blue line needs to be positioned above the orange line, indicating a clear breakthrough, as observed here. The blue line precisely breaks through the orange line and starts ascending above it. The third signal is our preferred RSI. Our favorite RSI should be continuously rising, and we observe the upward movement in our RSI. Thus, we have 3 signals and anticipate an easy closure of the trade with the profit. There is only about a minute remaining, approximately 50 seconds. The trade is currently profitable. As we can see, there are only around 6 seconds left. The trade was already gaining a profit of 60 pips. It worked flawlessly, displaying excellence. We witnessed confident and substantial candles. We noted the ongoing rise in RSI. We observed that the blue line of MACD significantly surpassed the orange line precisely at the moment of a breakthrough if we were to draw a vertical line now. That moment marks the beginnings of everything essentially. We broke through. RSI was rising and MACD's blue line went above, crossed the orange line and continued further above it. Therefore, everything occurred simultaneously. It yielded a substantial profit and allowed us to earn well. So I really hope you enjoyed this episode, and I would appreciate it so much if you liked it. Write any question you have in the comments and I will definitely answer them. Even maybe I will make a whole video about it. So I'm waiting for you to subscribe my YouTube channel. If you want to trade with me, subscribe to my Telegram channel where I provide free trade entry signals. All you need to do is follow along with me and make profits. See you soon.